Mastering order blocks will not only make you a profitable trader, but it will also give you a great edge over the market, as you will be trading the moment, having a full understanding of what is happening exactly on your chart. But while order blocks can be a very good key entry spot to trade the market, there is a reason why some order blocks work sufficiently fine and others gets completely ignored in the market, as if it was their crush. And in order to understand this, I tested out a lot of order blocks types on different timeframes, different assets, and different market conditions in order to find out the best high-quality order blocks that are really respected by the market. Applying strong rules and strategies to discover those order blocks that will actually increase our win rate. And through that quest, I gathered some of the most outrageous and interesting results. That proves that order blocks actually works on some certain market conditions and has some strong repetitive patterns that you will be able to see almost every day on your chart and take advantage of them to make big bucks for yourself. In this video, I will be showing you the best order blocks that works in the market from our endless backtesting and analysis. And if you follow all the strategies and rules that I will be revealing in this video step by step, you will be able to discover the best order blocks with high winning rates that you can trade on your chart daily. Each part of this video is as important as every other part of the video, as you pay full attention to the things I am about to teach you in this video. Take your time now to like and subscribe to our channel if you are new to Trading Tribe, to become officially part of the family. First of all, I will be teaching you on the important basic rules of order blocks, beginning from what we call the inefficiency. We always consider the candle that created the inefficiency as the last order block zone, believing that the most trading decisions were made during this candle. Hence the huge drop after the decision candle, which becomes our order block. An order block can also be the start of an impulsive move, becoming a potential spot for the market to return to. We call this one a base order block. And sometimes an order block can also occur at the middle of a price move, showing up in form of a candle with the same color of the trend price move, or a different color. This means that the decision candle can show up as a bullish or bearish candle. Actually, the color does not matter. In order to trade order blocks with ease, there are 3 rules that we must consider and apply anytime we're looking for a valid order block. Number 1. It must create inefficiency. An inefficiency occurs when a large influx of capital disrupts the equilibrium between buyers and sellers, resulting in gaps between candlesticks. Inefficiency suggests a drastic and fast move of the market participants from the decision candle point, which actually creates the order block zone. Each time you want to trade an order block, you want to see candles moving up like this one, with little to no wicks, thereby having good gaps, as those separating the candles by the body. You should not take this one with longer wicks, that is occupying the body of the last candle. This is called the efficient move, and this is the inefficient move, which is the right move. You must always make sure there is an inefficient move after the decision candle. Number 2. It must lead to a break of structure or a break of character. The break of structure helps to identify progressive trend movements as the market keeps breaking the last trend move before returning to the order block and keeps trending, while the change of character mostly signals reversals and a change of trend, giving it the name change of character. The most profitable move of an order block, as you will see me show you soon in the examples. The third rule is that order blocks must be unmitigated. When we say an order block is already mitigated, it means that the market has returned and touched the order block. And when an order block is unmitigated, it means that the market has not yet touched the order block. An order block can be used only once, and once it is used, we are only looking out for a new, fresh, unmitigated order block. We cannot use an order block that has already been used or mitigated, as it has a very less probability of giving us a profitable price move. Before we continue, meet our sponsor, VMONEY Swifts. VMONEY Swift helps you to exchange your SKRILL, NETELLER and Perfect Money to USDT and BTC. Chat them up on WhatsApp using the number on your screen right now. They provide a very fast transaction with a great customer care service. Highly recommended by the trading chief. Okay, let's go back to the video. Now let's do a quick exercise here. As you look at this chart undistracted, look deep into it and tell me if you have found the order block zone. Okay, whatever comes to your mind. Here is what you should have seen or have seen right now. This is the decision candle, and after the decision candle, we can see that the next candles were inefficient candles, and they have made a break of structure here, breaking the last move of the market, and that makes the decision candle an order block. So we draw out our order block box from it, which is fresh, and wait for the price to return to it and move the market upwards comfortably. And this fulfills the 3 rules of order blocks that I mentioned earlier: the inefficient candles with price gaps, the break of structure, and the unmitigated order block, which has now been mitigated. Write this down. The only time a decision candle can be considered as an order block is only when there is an inefficiency and a break of structure or a break of character. If those two are not present, it is not a valid order block. In order to dig deep into the world of order blocks, in my quest for more profits, I dedicated my time to backtest a lot of multiple order blocks and setups, in order to find out exactly which of them will guarantee a more high quality order block and the high winning rate. And as time went on, minutes turned hours, and hours turned days, and days into weeks. But after a very long time of backtesting, I came to discover that order blocks are not so much of a deep mystery, and based on the things I discovered, order blocks work under a particular sequence and conditions, and when certain market conditions are applied to the order blocks, they significantly improve my winning rates. And I also came to an understanding that there are a lot of repetitive patterns forming on the chart all the time, and that will voraciously increase the profit-making probability on order blocks for my subscribers. I journeyed into the deep to get you all this valuable information that you are about to witness, and if you are new to the channel, like and subscribe to make yourself officially part of the family. Here are the market conditions that makes for high-quality order blocks. Number 1. Market structure. There are 3 market structure patterns that make for high-quality order blocks. Here is the first structure pattern that kept repeating during my backtesting phase. For this, you will see an order block like this. It does a break of structure, making it a valid order block, and before the market returns to the order block zone, another decision candle has broken another structure, thereby giving us another trading opportunity. And now this gave a high chance for the market to fill in the gap, grab the liquidity below the second order block, and continue moving the price up faster when it taps the orders in the second order block, moving the price drastically up in an uptrend position. And in this pattern, the price breaking below the second order block does not actually mean that a market reversal will happen at that point, as it is a high chance that this move is just a liquidity grab for a stronger future movement. This second pattern is even more repetitive. This pattern is so good that I love to trade it repeatedly. Here is a valid order block, and before this order block formed, it first of all swept all these liquidity from this area. Those small highs, created by small retailers, and now wiped out, conquering more liquidity for future movements, making it a high probability order block to expect a good market movement from. And when the price returned to this order block, it moved the price down to the target direction. Easy to identify and very beautiful to trade. The third pattern happens like this. So we have an order block zone here, after a break of structure, but before the market returns to the order block, it creates a strong area of liquidity here. And this liquidity, the market will grab while returning to the order block to move the market to the target direction with ease. And this movement makes the order block zone a high probability order block that we can expect a high market movement from. The best way I trade order blocks is to place a limit order at the top of the order block. In this case, it will be a buy limit, and my stop loss will be placed below the order block, somewhere here, and my take profit target will be at the next high of the market. This way your risk management can be tight and ready to be hit by the market, either by hitting the stop loss or hitting the take profit target. Either way, one of them will be hitted successfully. Though I tell you honestly, if your stop loss got hit, it does not mean that the strategy was not correct. I always tell my students that if you follow a strategy correctly to the end, and it still hitted your stop loss, that means you lost the trade honorably. And if it hitted your take profit target successfully, oh my god, that's a big celebration, cause a lot of traders have not smelt profits since the day they started trading. Appreciate your wins. Now, after the market structure, the second thing that influence order blocks is the market spread. The spread sometimes, when it's too wide, will not be able to trigger the buy limit, and sometimes it can hit your stop loss too early, which will take you out of the trade too early, even when it's not supposed to be so. This feature greatly affects the high win rate quality on order blocks. And to solve this issue, make sure you are trading the market with a broker that has your best interest at heart, not the brokers that want to make just too much money on you. And that's why I've been using Deriv broker for the past 8 years. They have the best spreads in the market, with little to no spreads at all on your trades. I recommend them for every trader, and I will leave the link for anyone interested in making them their personal trading broker, just like I do. But before you trade with them, make sure you confirm what I just told you on their demo account for clarity. They are the only broker in the market that have your best interest at heart. Now, the third, final, and also the most important condition that make for high quality order blocks: the market trend and the freshness of the order block. After different backtesting and trading, I came to understand that order blocks works much better in a trending market more than inside a ranging market. And if you check the characteristics of a good order block, such as the break of structure, the inefficiency, and the unmitigated principle, see that they all suggest a trending move, and the order block being untouched before it is finally touched shows that the market must be making trending moves of forming more higher high and higher low, or forming lower highs and lower lows. Order blocks works better as you trade the order blocks that are forming according to the direction of the dominant market trend. And making sure you are trading a recent fresh order blocks will guarantee you more success in trading high quality order blocks, as the markets keeps changing directions, and waiting so long for an order block to finally touch when the markets have reversed already will only lead to more losing trades. You must trade according to the current market trend and not wait too long for order block to return. That is all you need to begin to identify high probability order blocks and start making profits in the market. This strategies and rules works on all time frames, and sometimes you can find the order blocks on higher time frame, and then you move to the lower time frame to find an entry for it. And if you want to improve on how to do a top-down analysis from higher time frame to lower time frames, here is a full top-down analysis course to guide you through on that. Make sure to like and subscribe to this channel for more free contents like this, and join the Tribe Soldiers on Telegram. The link will be in the description. My name is the Trading Chief, and it's a wrap for this video. See you in the next one.